Why Luton is the number one property investment hotspot for 2018. Back in 2003, Luton was voted as the worst place to live in the United Kingdom. Fast forward to 2018, and Luton is expected to be the biggest benefactor of investment throughout the year. And though what can only be described as a remarkable change in fortunes, the town has become a property hotspot, with house prices increasing on average by £42,000 in 2016. And of course, with property prices increasing by more than 19%, which is more than twice as fast as the UK average, and indeed much higher than anywhere else in the United Kingdom. Halifax have said that the average house price in Luton has gone from £214,000 to £256,000 and is expected to break through the £300,000 mark throughout 2018. Luton has come a long way, especially when you think back to 12 or 13 years ago, and Luton was top of the list for being the worst place to live in the UK. The area has grown popular with commuters thanks to the excellent trains and buses to get workers into the city in a short period of time. You can be in the city in just 30 minutes on the train from Luton. It is because of this that Luton has not to be ignored, as the capital has spilled out into regional areas surrounding the city. Even still, when you consider the rapid increase in house prices, Luton is still much cheaper than other areas with a similar distance to the City of London. Most of the areas that have seen the biggest price increases are those that are within commuting distance to the capital. Living in London is super expensive. Working in London comes with the best salaries, and it is for this reason alone that home buyers are willing to sacrifice commuting time in a trade-off for lower property prices. UK house prices increased by 7.5% in 2016, and we expect 2018 to be just as high. Of course, Luton will demonstrate a higher than average return for investors, though there are many areas close to London that offer just as attractive returns. In fact, it is worth noting that the picture is vastly different for those in the north. In some areas, we have seen huge casualties. For example, Aberdeen has seen £15,000 knocked off the value of each property on average. And this comes down to the city being too heavily dependent on the oil and gas sector. And of course, with the collapse in oil prices, there's been a knock-on effect for workers losing their jobs. With thousands of job losses, the demand for property in Aberdeen is dropping, and the local economy is still not doing very well. Other casualties include Bangor in Northern Ireland, Inverness and Blackpool. East Anglia has shown itself to be a solid riser, with house prices increasing by 10%, whereas the contract of the north showing just 0.1% increase. More and more people have found themselves priced out of the London and South East markets, whereas Scotland, the North, East Midlands, pricing has improved, and with that became more affordable for many looking to purchase. Annual house prices are expected to grow between 1% and 4% on average over the course of 2018. While of course tax changes are not deal, it is expected that with the stamp duty changes, it's going to have a knock-on effect for those looking at the buy-to-let sector. To find out more and to hear more of our research, visit our website. It's www.fjpinvestment.co.uk.